Let's get more on this rally in Microsoft shares. That stock jumping 9% after the software and internet giant posted strong growth in revenue and earnings across its business empire. We are joined now by Rishi Jaluria, Managing Director of Software for RBC Capital Markets. Rishi, thanks very much for giving us the time. You're hiking your price target by $25 US to 525. And you say that Azure, the cloud business, delivered in the latest quarter?
Yeah, absolutely. Thanks so much for having me. Look, this was really a standout quarter for Microsoft, and I think exactly what software and cloud companies needed, given all the uncertainty that we're facing in this environment with tariffs, potential trade wars, obviously the economic numbers. But Microsoft absolutely delivered and more on Azure. The overall Azure re-accelerated in the quarter. That was maybe 2 or 3 quarters ahead of where the street and where investors had expected. And maybe more importantly, not only are they seeing this incredible strength in AI, but also the rest of the Azure business outside of AI also re-accelerated. And I think that was driven by continued share gains, continued migrations to the cloud, as well as just better execution than what we've seen over the past couple quarters.
And of course, people do argue, I think some investors feel that they're relatively immune to tariffs.
I think that's right. Look, I mean, as a whole, I would say software as a service should be pretty immune to tariffs because you can't actually tariff software. We obviously have to think about the second derivative impacts and think about the end customers themselves and, obviously the recessionary fears and everything like that. But absolutely, this should be pretty, I would say immune to tariffs. And even in the event of a recession, I think this is one of those names that should be more defensive and holds up given the sticky nature, given their enterprise focus as well.
And it's interesting, we get a report a few weeks ago, I don't know if it was confirmed, that Microsoft was actually cutting back on its orders for data center equipment. But now there's a risk that with the Azure growth that they might even have shortages of capacity.
Yeah, they did talk about capacity constraints for AI, although that's being driven more by just higher demand rather than not having enough supply. But the reason behind the kind of data center cancellations that we picked up on our checks is it is just Microsoft kind of figuring out how to optimize its infrastructure, how to do more with less. And if you recall back in January, there was a little bit of a renegotiation between Microsoft and OpenAI, where Microsoft still has first rights of refusal on training of models. There's still exclusivity with model distribution with APIs. However, if anyone else wants to be doing the post-model training after Microsoft says no, those workloads go over there. So it's Microsoft also being kind of a little more choosy where it finds value in AI revenue as well.
You say that people are underestimating their prowess, their potential in AI. Just remind us, how is AI important for Microsoft?
Yeah, absolutely. Look, I think that's one of the reasons why we like Microsoft so much is they do have this strong leadership position in AI that really investors are massively underappreciating in my mind. And, it not only starts with the OpenAI relationship, and obviously it's a very close-knit relationship, but I think it's bringing AI throughout the entire Microsoft stack. And we see that in things like their Office Copilot, which maybe got off to a slow start, but now it's billions of dollars of ARR already at this point, growing triple digits. Dynamics Copilot, right, in their own CRM and ERP, integrating that. Even on the consumer side, leveraging that on search, and you actually saw search re-accelerate for them this last quarter as well. You see kind of little bits of AI throughout LinkedIn and gaming. And so to me, that's really the big thing. It's not just the fact that they have this partnership with OpenAI, it's the fact that they have the ability to bring AI throughout the entire portfolio of Microsoft products.
That's it. You gave us a reminder there. They own LinkedIn, and they are much, much bigger in gaming. And it's fascinating with AI. We talk about it, but we're really just in the Neolithic era, aren't we? We haven't even seen 1% of the power of this thing yet.
I think that's exactly right. Look, I'm old enough to remember going through the advent of the internet in the 90s, and I draw the analogy, we're at the equivalent of 14.4 dial-up. And, the way that we use the internet today is leaps and bounds beyond what we could have, even the most fervent bull would have said in the 90s. No one would have thought the idea you can, get groceries and food and transportation and a driverless vehicle got to your doorstep without talking to a human being, but here we are today. And so I think the ways that we're going to be using generative AI in the next 1 or 2 decades will be well beyond what you and I can imagine today. But make no mistake, this is transformational technology. And I do think, much like the internet, much like smartphones, this is going to just change society as we know it.
Of course, they are spending, like a lot of other internet giants. Their capex in the latest quarter jumped about 7 billion to 21 billion. But you say about half of that spending is on long-lived assets that will pay off over 15 years.
Yeah, that's right. And what I think is really important on CapEx is the fact that their growth rate of CapEx is going to start to slow heading into FY26. Recall their fiscal year ends in June. And so they're starting, not only are they showing real AI revenue, to the tune of, I estimate about 15 billion of ARR today, but now their spending rate is going to start to slow down. And very importantly, you made that distinction between short-lived and long-lived, which I think is really important. The short-lived, there's a little bit more of a tight correlation, but a lot of these long-lived assets will have payback periods that'll take a little bit of time, but they'll also pay dividends, I think, for 3, 5, 10 years to go. And it's similar to what happened when they first built out the entire Azure stack. You had to build out all these assets, but they've significantly reaped dividends since then.
Leave us with a final thought. What about antitrust? Because, when I think about the power of Microsoft, and if I was running a business, I'm probably going to be using Microsoft software, I'd be tempted to go with Azure. But does this company have too much power? Because eventually power corrupts.
Yeah, I think that's the question we have to ask is, does this harm the customer? And bear in mind, I'm no legal expert. But what I think is really important is Microsoft under Satya has been very much a different Microsoft than the Microsoft that we grew up with. And it is one that is focused on interoperability, on customer choice, on the phrase they use is meet the customer where they are. And you see that even with the AI strategy. The DOJ is really focused on the open AI relationship. But Microsoft has relationships with Llama and with Mistral and now with DeepSeek, and even something like GitHub Copilot. You can bring your own LLM. You can say, I don't want to use OpenAI as the underlying LLM. I want to use Gemini. I want to use Anthropic. And so the fact that Microsoft has always demonstrated this level of interoperability, I think means it's hard to make the case that they're truly harming the customer, right? They might be a big company with a big portfolio and a lot of power, but they're still leaving the choice up to the customer, not forcing them to do things they don't want to do.
We'd better go. Thank you very much, Rishi, for joining us.
Thank you.
Rishi Jaluria, Managing Director for Software at RBC Capital Markets. Up next.